Hello, everyone. Welcome back to the Investing Iguana, where we talk about all things investing and finance. I'm your host, Iggy, and today we're going to take a look at Micron Technology Inc., one of the leading producers of memory chips in the world. Micron has been facing some challenges lately, and its stock price has been on a downward trend. So, is Micron a buy, hold, or sell in 2023? Let's find out. First of all, let's talk about what's been going wrong for Micron. In the second fiscal quarter of 2023, the company reported some disappointing numbers. Its revenue was $3.69 billion, which was lower than both the previous quarter's $4.09 billion and the same period last year's $7.79 billion. That's a huge drop in sales, and it shows that Micron is losing market share and customers. But that's not all. The company also reported a net loss of $2.31 billion on a GAAP basis and $2.08 billion on a non-GAAP basis. That means that Micron is losing money on every chip it sells, and it's burning through its cash reserves. In fact, Micron had inventory write-downs of $1.43 billion and a negative free cash flow of $1.81 billion in the quarter. That's like buying a bunch of bananas for $10 and then selling them for $5, while also throwing away half of them because they went bad. Not a good business model, right? So, what's causing these problems for Micron? Well, there are two main factors, demand and supply. On the demand side, Micron is suffering from a decrease in consumer spending on new electronics. This is because many people bought new laptops, smartphones, tablets, and other gadgets during the pandemic when they were stuck at home or working remotely. Now that things are getting back to normal, they don't need to upgrade their devices as often, and they have less money to spend on non-essential items. On top of that, inflation has been rising in many countries, especially in the US, where Micron is based. This means that the prices of food, gas, rent, and other necessities have gone up, leaving less disposable income for consumers to spend on electronics. Inflation also erodes the value of money over time, making it harder for investors to justify buying stocks that don't pay dividends or have low earnings growth. On the supply side, Micron is facing a complex geopolitical situation that affects its ability to sell its products in some markets. China, which is one of the biggest buyers of memory chips in the world, has recently banned Micron chips in some sectors. This is part of an ongoing trade war between China and the US, which has also resulted in tariffs, sanctions, and restrictions on technology transfers. This has created a lot of uncertainty and risk for Micron and its shareholders too. For example, if China decides to ban more Micron products or impose higher tariffs on them, it could hurt Micron's sales and profits even more. On the other hand, if the US government decides to retaliate against China or protect Micron from foreign competition, it could trigger a backlash from other countries or violate international trade rules. So, as you can see, Micron is facing some serious headwinds that are affecting its performance and outlook. Micron's opportunities. However, it's not all doom and gloom for Micron. There are also some positive signs that indicate that Micron could bounce back in the future. One of these signs is that demand for PCs and other electronics is expected to eventually rebound as inflation decreases and consumers' equipment ages and requires replacement. For example, if you bought a laptop in 2020 during the pandemic peak, you might want to upgrade it in 2024 or 2025 when it becomes slow or outdated. Or if you bought a smartphone in 2019 before the pandemic hit, you might want to switch to a newer model in 2023 or 2024 when it becomes obsolete or broken. This means that there will be more demand for memory chips in the coming years, and Micron could benefit from this trend. Another sign is that Samsung, one of Micron's main competitors, has decided to cut its memory output by 10% in 2023. This is because Samsung wants to focus more on its own products, such as smartphones and TVs, and less on selling memory chips to other companies. This could be good news for Micron, as it could reduce the oversupply of memory chips in the market and potentially increase the average sales prices and margins for Micron. This, in turn, could improve Micron's profitability and cash flow. A third sign is that the long-term demand for memory is expected to grow significantly due to the emergence and expansion of new technologies and sectors. These include artificial intelligence, virtual reality, augmented reality, cloud computing, autonomous driving vehicles, and other high-tech applications. These technologies require a lot of memory to store and process large amounts of data, and Micron is well positioned to provide the memory solutions for these markets. For example, Micron has been investing heavily in developing new types of memory, such as 3D NAND, 3D XPoint, and DDR5, that offer higher performance, lower power consumption, and greater reliability than traditional memory. These innovations could give Micron a competitive edge over its rivals and increase its market share and customer loyalty. So, as you can see, Micron has some promising opportunities that could boost its growth and recovery in the long run. Micron's valuation. Finally, let's talk about how much Micron is worth and whether it's a good investment or not. As of June 8, 2023, Micron's stock price was $62.54 per share. This gives it a market capitalization of $69.6 billion. However, this doesn't tell us much about whether Micron is cheap or expensive. We need to look at some other metrics to get a better idea. One of these metrics is the price-to-earnings ratio, or P/E ratio. This tells us how much investors are willing to pay for each dollar of earnings that a company generates. The lower the P/E ratio, the cheaper the stock is relative to its earnings. The higher the P/E ratio, the more expensive the stock is relative to its earnings. However, since Micron is currently losing money, we can't use the P/E ratio to value it. Instead, we need to use another metric called the forward P/E ratio. This tells us how much investors are willing to pay for each dollar of expected future earnings that a company will generate. The lower the forward P/E ratio, the cheaper the stock is relative to its future earnings. The higher the forward P/E ratio, the more expensive the stock is relative to its future earnings. According to analysts' estimates, Micron is expected to lose $2.72 per share in fiscal 2023 and earn $1.23 per share in fiscal 2024. This gives it a forward P/E ratio of 50.84 for fiscal 2024. This means that investors are paying $50.84 for every dollar of expected earnings that Micron will generate in fiscal 2024. Is this a reasonable price? Well, it depends on how you compare it to other companies in the same industry. For example, Samsung has a forward P/E ratio of 9.35 for fiscal 2024. This means that investors are paying $9.35 for every dollar of expected earnings that Samsung will generate in fiscal 2024. This makes Samsung much cheaper than Micron on a forward P/E basis. However, this doesn't mean that Samsung is necessarily a better investment than Micron. There are many other factors that affect a company's value and performance, such as growth potential, competitive advantage, innovation, customer loyalty, etc. For example, Micron might have higher growth prospects than Samsung due to its exposure to new technologies and markets. Or Micron might have a stronger competitive edge than Samsung due to its superior products and services. These factors could justify a higher forward P/E ratio for Micron than for Samsung. Another metric that we can use to value Micron is the price-to-sales ratio, or PES ratio. This tells us how much investors are willing to pay for each dollar of sales that a company generates. The lower the PES ratio, the cheaper the stock is relative to its sales. The higher the PES ratio, the more expensive the stock is relative to its sales. As of June 8, 2023, Micron had a trailing 12 months TTM sales of $16.8 billion for. This gives it a PES ratio of 4.14. This means that investors are paying $4.14 for every dollar of sales that Micron generated in the past year. Is this a reasonable price? Again, it depends on how you compare it to other companies in the same industry. For example, Samsung had a TTM sales of $224 billion. This gives it a PES ratio of 0.31. This means that investors are paying 31 cents for every dollar of sales that Samsung generated in the past year. This makes Samsung much cheaper than Micron on a PES basis. However, again, this doesn't mean that Samsung is necessarily a better investment than Micron. There are many other factors that affect a company's value and performance, such as profitability, efficiency, quality, etc. For example, Micron might have higher profit margins than Samsung due to its lower costs and higher prices. Or Micron might have higher efficiency than Samsung due to its better inventory management and production processes. These factors could justify a higher PES ratio for Micron than for Samsung. So, as you can see, valuing Micron is not a simple task. There are many different metrics and factors that we need to consider and compare. And different investors might have different opinions and preferences about which metrics and factors are more important and relevant. So, after looking at Micron's challenges, opportunities, and valuation, what is our recommendation for Micron stock? Should we buy, hold, or sell it? Well, as always, there is no definitive answer to this question. It depends on your personal goals, risk tolerance, time horizon, and portfolio diversification. However, based on our analysis, we can give you some general guidelines and suggestions. If you are a long-term investor and can tolerate some short-term volatility and uncertainty, holding or even buying Micron stock could make sense given the potential for recovery and growth in the longer term. As we discussed earlier, Micron has some promising opportunities that could boost its performance and profitability in the future. These include the expected rebound in demand for PCs and other electronics, the expected benefit from Samsung's output cut, and the expected growth in demand for memory due to new technologies and sectors. These factors could lead to higher sales, earnings, cash flow, and dividends for Micron in the long run. Furthermore, analysts believe that Micron's earnings per share could climb to $7 to $8 in fiscal 2026. If we assume a conservative 10x earnings multiple on that, we get a target price of $75 per share for Micron in fiscal 2026. That's about 20% higher than today's price of $62.54 per share. If we add Micron's dividend yield of 0.7% per year, we get an annualized return of about 6% for holding or buying Micron stock until fiscal 2026. That's not a bad return for a long-term investment, especially considering that the average annual return of the S&P 500 index over the past 10 years was about 14%. Of course, this is not a guarantee or a prediction of what will happen in the future. It's just an estimate based on some assumptions and projections that could change over time. However, if you are a short-term investor or are risk-averse, you may want to consider selling or avoiding Micron stock due to the expected near-term challenges. As we discussed earlier, Micron is facing some serious headwinds that are affecting its performance and outlook. These include the decrease in consumer spending on new electronics, the inflationary pressures on consumers' income and purchasing power, and the geopolitical tensions with China that could limit its market access and growth potential. These factors could lead to lower sales, earnings, cash flow, and dividends for Micron in the near term. Moreover, analysts expect Micron to generate substantial net losses in fiscal 2023 and weak cash flow that would limit its ability to return cash to its owners via buybacks. This means that Micron might not be able to reward its shareholders with capital appreciation or income in the short term. In fact, Micron's stock price has already fallen by about 30% since its peak of $89.36 per share in September 2022. This shows that investors are losing confidence and patience with Micron and are selling their shares to look for better opportunities elsewhere. Therefore, if you are looking for quick profits or steady income from your investments, you might be better off selling or avoiding Micron stock and investing in other companies or sectors that have stronger fundamentals, better prospects, and lower risks. So, there you have it, folks. That's our analysis and recommendation for Micron Technology Inc. in 2023. As you can see, Micron is a company that has some challenges and opportunities that could affect its value and performance in different ways. Depending on your investment horizon and risk tolerance, you might want to buy, hold, or sell Micron stock based on your own research and judgment. We hope you enjoyed this video and learned something new today. If you did, please give us a thumbs up and subscribe to our channel for more investing and finance content. Also, let us know in the comments below what you think about Micron and its stock. Do you agree or disagree with our analysis and recommendation? Why or why not? We'd love to hear your thoughts and opinions. And remember, this video is for educational and entertainment purposes only. It is not financial advice or a recommendation to buy or sell any stocks. Always do your own due diligence and consult with a professional before making any investment decisions. Thank you for watching and see you next time on the Investing Iguana.